Are we online? Okay. Okay. Welcome, members of the committee and officers to the meeting of Nottinghamshire Pension Fund Committee. My name is Eric Kerry, Councillor. I'm the chairman of the committee, and may I remind members that the meeting is being broadcast live. May I also remind members to use the microphones when speaking so you can be heard on the broadcast. I was going to read about members of the public. We don't have any physically here today, so I'll do that if anybody turns up. And may I ask mobile phones and other devices to be switched to silent, please. Which I need to do. Okay. So item number 1 is the minutes of the last meeting held on the 14th of December. I'm asking the committee if the minutes of those can be agreed, please. Everybody happy? Content? That looks like that's okay. Thank you. I'll sign them later. Item number 2 is to note the replacement of Councillor Andre Camilleri with Councillor Richard Butler, who we have met before in the committee. Welcome, Richard. I hope you enjoy your stay with the committee, and I would just like to thank Councillor Camilleri, put on the record, thank him for all his hard work whilst he was also vice chairman of the committee and all the other work he's done. Thank you very much, Andre. Item number 3 is apologies for absence. So, Joe, Toomey, can you confirm those, please?
Thank you. We got an apology from Councillor Garner. We've also got an apology from Councillor Place, who's being substituted today by Councillor Creamer. We also have apologies from Councillor Davidson and, not Councillor Davidson, from Yvonne Davidson and from Sue Reader.
Okay, thank you much. Anybody else have any other apologies for absence, please? Okay, I don't see it. Thank you very much. We'll move on to item number 4, which is declarations of interest by both members and officers. So does any council or officer have any interest in any matter on the agenda that they need to disclose? And if so, explain the reasons. Again, no indications. Thank you. We swiftly then move on to item number 5, the first substantive item. Before I hand over to Tamsin Rabbits to introduce the report, I'd like to move the recommendation, which is on page 17 of your agenda pack.
I'll second that, Chairman.
Thank you very much, Councillor Sunnington. May I now hand over to Tamsin, the Senior Accountant for Pensions and Treasury Management, to present the report, please.
Thank you, Chair. Members are aware of the well-attended working party in January to discuss the investment strategy. This meeting gave members the opportunity to discuss the investment strategy of the pension fund in detail, and as a result of this, the following recommendations are made to committee. Reduce the outperformance target to 0.8% as part of the gradual process of de-risking the fund as it becomes more mature. Reduce the allocation to growth by 3% through a 1% reduction in each of developed markets, emerging markets and private equity. Increase the allocation to income by 1% and amend the income category subclass allocations as shown in Table 1. Increase the allocation to liquidity by 2% and amend the inflation category subclass allocations as shown in Table 2. The Working Party also considered 2 members' questions about currency hedging and tobacco holdings, which were responded to in a paper provided by William Bourne, our independent advisor. No further actions were recommended as a result of these discussions. Climate risk training was provided by LGPS Central. Thank you, Chair.
Thank you very much, Tamsin. So we're not quite as mature as we thought we were following the actuaries' report for the previous year. That obviously the market's changed, so we're not fully funded at this stage, but we're getting close to fully funding, which is the reason why we've looked at the our asset allocations to de-risk them and have more investment in income and liquidity. So the members, I think most of the members were here at the working group. Are there any further questions or comments, please? Councillor Waters first. Yes.
Is that on now? Thank you, Chairman. Yeah, just turning to, I think it's page 16, point 18, and I quote, a detailed review of tobacco investments was made in winter of 2021-22. The fund listed exposure to tobacco at 31st December 2021 was less than 0.5% of the fund. The majority of the fund's exposure was through market cap passive funds. The transactional cost of moving these investments to alternative passive funds would be significant, but more importantly, the ongoing management costs of the passive investments against a more expensive index would be considerable, especially relative to the scale of the investments excluded. Then it goes on to say, moreover, to introduce a formal exclusion across the fund would require changes to some of the fund's other investment arrangements at significant one-off and ongoing costs, including some funds where there's no actual exposure to tobacco currently. As a result of this, members acknowledge that under these circumstances, it would not be possible to justify the costs and risks of an exclusion policy, but wish to keep the fund's exposure under review. Then, based on the above, point 19 says no further action is recommended. On record, this is something I disagree with, and many of the statements I was given on the working group I felt were vague and were unevidenced at that particular time. I believe we have a case to exclude tobacco, and it flies in the face of what Councillor Dr. John Doddy championed, to have a smoke-free Nottinghamshire by 2035. This pension committee has made clear that you have a preference for engagement over exclusion of unethical assets. This means, in my view, you sit on the fence and wait for regulation change rather than proactively excluding holdings like tobacco. It is clear that the Nottinghamshire Pension Fund embarks on a form of greenwashing. This is commonly known as green lighting, in which you highlight your ethical stocks, but whilst having limited public disclosure on the number of sin stocks you hold, such as alcohol, tobacco, gambling, and companies involved in ammunition sales to dodgy regimes, as well as your holdings in fossil fuel companies, whilst trying to claim that you are green. The fund does this on the premise that you will engage with the companies to hopefully make them change their ways. This is a cornerstone ethos of the Nottinghamshire Pension Fund. It is, however, a well-known practice for many passive funds and some active and individual stockholders to lend their stocks and securities. This keeps fund costs down, especially with passive funds, and it can increase overall profits. However, Mr. Chairman, if a holding is lent out, you do not actually get the attached voting rights, and thus you cannot engage. Do we allow our fund managers, etc., to lend out any of their holdings, i.e. our holdings? If so, how does this fit with the cornerstone policy of engagement over exclusion? Thank you, Chairman.
Thank you, Councillor Waters. The statement in paragraph 18 was that members acknowledged that we can't summarise in a report. Everybody's comments. It would take hours and hours to go through all those ones. So that was the feeling of the majority feeling of the committee at that time. In terms of the lending, I think we do stop lending in terms of our passive agreement with LGIM. But Tamsin, would you like to answer that, and also question about the up-to-dateness of the information in the paragraph, please? Maybe Mr. Bourne would like to come in first.
The answer is yes, LGIM do use stock lending. Like you, I've kicked the tires with them because I'm not particularly pro it for exactly the reasons you express. I think when they gave their presentation to us, was it at the last meeting? They talked about stock lending there.
Yeah, they did.
It does produce profit, but it certainly reduces your ability to engage. if we went back and said, please do not use stock lending, of course there would be a cost to the pension fund because they do rely on that to get a certain amount of profits.
And I think the numbers they were talking about was 1 or 2 basis points in terms of return.
They're certainly fairly small.
Yeah.
I mean, all I can suggest is that if the committee feels strongly about it, we kind of dig into stock lending, maybe have a report on all our managers.
Yeah. Okay. Thank you. Tamsin, please.
Yeah, can I add that that's something that Central, that they vote all of our directly held shares, and that's something that the RI team are very careful about, aware of and careful about. And if there's a contentious vote coming up, they will call any stock that they've lent back so that they can take part in the vote.
Thank you for that clarity, Tamsin. Very good. In terms of the information, it says, have we got a recent view of what holdings we have directly or indirectly in tobacco, and can we update that information for Councillor Waters, please?
The information that came to the working party was up to date.
Right. Okay.
Yeah.
Thank you. Thank you very much. Any other questions, comments? Councillor Jackson, I think you indicated.
Yeah, thank you, Chairman. I was just wondering whether, unfortunately, I couldn't make the working party, whether you consider the age of what members take their pension, or eligible to take their pension. I mean, we all know that the state pension age is now slowly rising for our eligibility, and I presume people here can take an early retirement if they wish, and presume there's a formula then of what the pension they have over the years. But I just wondered whether the actual age for a normal retirement is in parallel with the state pension, or is that sort of completely separate?
Yes, Mr. Clues, would you just like to clarify about the 65 and 60, I think, in the LGPS?
At the moment, members can choose to take their pension after 55, and that's when they can take it. Obviously, there are changes afoot to raise that to 57. Obviously, when they do take their pension, there are calculations in their benefits in relation to reducing their benefits up to state pension age, and those are calculated into their benefits as they take them. I would like to add that we have seen over the last probably 2 years more deferred members taking their pensions at 55 onwards than we would have seen probably before the pandemic. So there is sort of growth, if you like, of people taking their pensions earlier than they would have normally have taken them prior to the pandemic. But 55 is the current, and it will be going up to 57.
Thank you. Yes, please.
I mean, well, is not a risk there then that if the calculations aren't right, because unfortunately we are living longer now, and we're getting older with, and the state pension recognises that. That's why they're slowly raising the state pension age. If more and more people are eligible at 55, okay, it's going to rise 2 years. Is there not a risk then of the demand on the pension fund?
Okay, so I believe that issue is about liquidity and having the funds to be able to pay those pensions early if required. So, Sarah, would you like to take us through that, please?
I think the point that I wanted to make was actually the actuaries indicated that mortality is falling rather than increasing, and that that calculation is actually built into the valuation of the fund. So the other thing we've seen is obviously substantial increase in death of members, both as pensioners and death in service of members over the last few years. So, but that is all taken into consideration as part of the valuation.
Yeah. So when an individual makes a decision they want to take early pension, whatever, there's a calculation. So those liabilities are spread over a longer period of time. So there should not be any impact on the fund in total. Councillor Butler.
Thank you. Just a query, really. Are we basically, though, tied into, in effect, national legislation and guidance as to the age that people can take pensions? Because I think it's only in fairly recent years, isn't it, that people have been able to access pensions at 55. So, or is that a completely separate issue altogether?
that's completely separate. It's part of the LGPS regulation.
Yeah. Local government pension schemes across the country, not just ours, so as different to the statutory pension that other pensioners get. Thank you. Okay, any other questions or comments, please? Councillor Waters, yeah?
Yeah, I'm just going to say on the basis that you don't exclude stocks and we can't engage with some of our certain holdings if we do lend them out, then I really can't support this. Well, thank you.
Thank you for that openness. I don't see any other indications, so the recommendation has been moved and seconded. Can I see a vote, show of hands, all in favour, please? Okay. All those against? Any abstentions? So 2 abstentions. Thank you, that's carried. Sorry?
City Council.
No. Not. Councillor Matsiko, thank you for indicating, but you're not a voting member. But it's very nice to see you're engaged in the process. Thank you. Thank you very much. Move on to item number 6, Treasury Management Strategy for 24-25. Before I hand over to Kieran, who will introduce the report, I'd like to move a recommendation on page 33 of the agenda pack. May I have a seconder, please? Thank you very much. Kieran, would you take us through the report, please?
Thank you, Chair. This is the Treasury Management Strategy Statement for 24-25. Responsibility for the statement strategy of the Pension Fund was delegated to the Pension Fund Committee at full council in February 2020. This report lays out the strategy for the next financial year. The aim of Treasury Management is to ensure that the pension fund maintains a prudent level of liquidity and that any cash balances are deposited with secure counterparties to generate a low risk return. The statement sets out the Treasury Management practices through which this is implemented, and there are no significant changes from last year's statement. The committee is asked to approve the statement for financial year 24-25. Thank you, Chair.
Thank you very much, Kieran, and for the comment that there's very little changed in detail. So, any members have any questions or comments, please? I see no indications, so we'll move to the vote then. All those in favour, please show by hands. Thank you very much. I think that's unanimous. Carried. Okay, item number 7 is conferences and training. Again, the recommendations on page 37 of the report, and I will move that. Thank you very much. Tamsin, would you take us through our training report, please?
Thank you, Chair. The Fund is committed to ensuring those charged with decision making and financial management have effective knowledge and skills, and this is achieved through attendance at key conferences and the provision of specific training and information for committee and board members. The Department for Levelling Up Housing and Communities published its response to the consultation on LGPS Next Steps on Investments in November and set expectations that all funds should have a formal training policy and report against it. In advance of this, whilst we await guidance, a training plan is appended to the report, and we expect to report on training undertaken in the Pension Fund Annual Report. In addition, the General Code of Practice was published in January and expected to come into effect later this month. This sets out an expectation that all governing bodies should maintain a list of items the members of the governing body should be familiar with, complete a training needs analysis on a regular basis, and have a working knowledge of a list of items as relevant to their scheme. We are anticipating further guidance on these issues, and a report to committee will follow in due course. For the next financial year, the planned conferences are listed in the report. Members will be contacted directly by email about these next week, and all are encouraged to offer to attend. For new members of the committee, or those wishing to refresh existing knowledge, the LGPS Fundamentals course is strongly recommended, and it is anticipated that this will be available in physical and virtual format in the autumn this year. There is a charge to attend this worthwhile course, so please ensure you're available for all the relevant dates before asking me to book places. Officers attend training courses where these are required to ensure they're properly skilled and qualified to fulfil their responsibilities. Thank you, Chair.
Thank you very much, Tamsin. You've all seen the report. There's quite a lot of detail in there, and I think the one item that is coming up relatively soon, that is in May, is the property tour, 22nd, 23rd. And I think it would really, really help Tamsin if we could today have all the members here, not just the voting member, but other members from the city and unions, etc., indicate their ability to go on that, because we really need to get it organised as soon as possible. So maybe after the meeting, if we could talk to Tamsin and indicate our ability to attend, that would be very, very helpful. Are there any other questions or comments, please? Okay, I see none. So the recommendation has been moved and seconded. All those in favour, show of hands, please. Again, that's unanimous. Thank you very much, members. Moving on to item number 8, the Local Authority Pension Fund Forum Annual Conference. Page 46, recommendation, I'll move. Thank you. So, Tammy, will you take us through the report, please? Thank you.
Thank you, Chair. The 2023 LAP conference, entitled Action Plus Impact, was held between the 6th and 8th of December 2023. The conference was attended by Councillor Stephen Garner, with an officer attending some of the sessions online. Details of the main sessions are set out in the report. Thank you, Chair.
Thank you very much, Tamsin. In the absence of Councillor Garner, who's sadly not with us just today, I was aware that Councillor Garner was going to comment about the conference and said that it was very, very informative, quite intense, and that it was well worth going to. So, with an indication from Councillor Garner, we will be looking for other members to go to this year's in December, if we can. So, any questions or comments about the report, please? Again, no. Okay. So we've moved the recommendation. All those in favour of the recommendation, show of hands. Thank you very much. Again, unanimous. Moving on to item number 9. It's our independent advisors report. So before I hand over to William Bourne, Mr. Bourne, I'll move the recommendation on page 47.
I will second it, Chair.
Thank you very much, Councillor Saddington. William, would you take us through your report, please?
Right, thank you very much, Chair. I'm going to take my report largely as read and really focus on yesterday's budget announcement, because it seems to me it's a really good example of the problems which are facing all Western governments at the problem. But very quickly on my report, inflation is coming down. And when I talk about in my worries that it's going to be higher in the long term, I'm meaning kind of 5 to 10 to 15 years out, not the next 5 years. Growth is going to remain low. US looking rather better. China definitely a source of potential risk, because China is struggling, really struggling at the moment with the problems of falling into deflation, a bit like Japan did 30 years ago. Generally, I think a year where you've got all these political elections around the world is likely to be pretty benign for markets. So I'm expecting at least a very short term to be, reasonable growth, inflation under control, everything looking okay for markets. So coming on to the UK budget. Yeah, I'm not proposing to talk about the giveaways. At this stage in the electoral cycle, we all know that every party is going to give away what it can. I will focus on, do the numbers add up, and how's the government going to finance this long term. So starting off with the numbers, the Chancellor has set himself a rule of trying to have a primary surplus, i.e. an excess of receipts over expenditure within 5 years. And his numbers just about do that, but really he's not actually saving any money. He's not the surplus is very small over the next 5 years. They rely on 2 quite important things. One is that the Office of Budgetary Responsibility's forecasts for growth are a lot higher than they were last November. They may be right, they're still quite low growth, below 2%, but they are much higher, and that's given him a bit of room to make his numbers add up. And the second is inflation. And again, the OBR is expecting inflation to remain below 2%. Now, if they're right, that's great. If they're wrong, the market is going to push bond yields up, because that's what happens when inflation goes up. and the cost of debt service is going to rise. Because within his numbers, over the next 5 years, he is expecting the net kind of tax take to fall, which makes sense given that he has announced some tax cuts, but he's expecting the cost of debt service also to fall. And that's where I have my problem, that I don't think the cost of debt service is going to fall. So all in all, it's a very narrow path he's set himself. The numbers could add up, but if the forecasts are wrong, if I'm right that bond yields rise, they're not going to add up. So then moving on, how is he going to finance it? And at the moment, the UK government has got kind of the amount of debt it has, total debt, to the level of GDP is about 100%. And his forecasts, and he made quite a lot of it in his speech, had it coming down to about 90% in 5 years' time. And that's driven largely by the little kind of primary surpluses he's hoping to generate. Problem is that if you go back to before the global financial crisis, governments targeted 40%. And it matters. And it matters because debt service, the cost of actually paying interest on gilts, is currently around 9% of GDP. And that's all money which could be spent providing public services if it wasn't spent on having to pay interest to finance borrowing. If that cost goes up, of course, the percentage goes up and there's even less money to spend for what the government really wants to spend money on. So you need to get it down, in my view, from 90 to a lot lower number. If you go back in time, governments around the world, and I should say the UK is not in the worst position by a long stretch. It's got some big advantages, but it's not in the best position. But if you go back in time, governments have been quite lucky. After the Second World War, for the next kind of 30, 40 years, they had high growth, and that allowed them to live with a relatively high cost of debt service. Go forward to the kind of 60s and 70s, you had high inflation, so the real value of the kind of debt fell down, and that again kind of gave them an escape clause. And of course, over the last 20 years, interest rates have been low. And that again meant the cost of servicing their debt was low. But going forward, I think that cost is going to rise. I don't think any of those three things are likely to happen. And we're going to see a higher cost of debt service. And that is going to derail the government's numbers. Now, if you are America, and America's in a much worse position, and the cost of debt to GDP is forecast by the government's own forecasters to go to 250% of GDP in 25 years. If you're America, you have the dollar, and you can kind of print money, and somebody will accept it. But we're not in that position. And that's why I think the bond yields are likely to rise in the longer term, but maybe in fact the short to medium to long term, and settle at a higher level. Because if the investors begin to lose confidence in what the government's finances, they're going to demand higher bond yields. And that in turn is going to have a rather kind of nasty circle of higher cost of debt service, more pressure on government finances, less confidence. And that is at the heart of what I'm saying in my report, why I think in the long term, inflation is the only way out. Now, again, I really stress that the UK is not, by a long stretch, not in the worst position here. We've got some big advantages, but some disadvantages. And it is very typical of what's happening in almost every country in the world. So there's a kind of bit of a rant there about what's going on, but I probably better stop there and open for questions.
Okay. Thank you very much for that overview, William. You mentioned deflation in China. In view of what you're saying about interest rates going down, is there any chance of deflation in the UK? That's the first one. The second one, with the bond yields, etc. Obviously, we've just done our new asset allocation strategy implementation. Are there any risks? Does that increase the risk in terms of that? So we have to keep monitoring it as we go forward.
First of all, deflation in the UK. I mean, China will definitely add a kind of deflation. As it definitely, there's a chance that China will add a deflationary impulse to the world. I don't see the UK going into deflation under any circumstances. Secondly, I said a little bit more about how this affects the pension fund. I have a strong view, as you just heard, that bond yields will go higher, and therefore we are being very slow and considered, as came out in the SAA report, as to how we put more money into bonds. But that said, index-linked gilts in particular are the best asset we have to match our liabilities. And if indexing gilts went to 2%, 2.5%, 3%, I will be arguing to put much more money into them. And I mean 20, 30% of the fund, that kind of level.
Okay.
So, yes, in the very short term, if bond yields rise, you will see some impact on our gilt holdings, a negative impact. But in the long term, I would respond to that by saying, let's put more money in and using that to pound cost average to get a better in price.
Okay, and is that all about timing? Because moving out of equities into is a very important issue.
It is about time. And I suppose I should add one other thing: is that higher bond yields will also have an impact on the valuations of some of our alternatives if they're long duration, and particularly infrastructure. But ultimately, I mean, we've got those for the long term. We're a long-term fund, and the actual assets, they will still, they're not going to fall to zero or anything like that. There may be a kind of fairly measured reduction in the value of the assets. They will continue to throw off an income stream which will, to an extent, be linked to inflation, and that's why we hold them.
Thank you. Any other questions? Yes, Councillor Waters.
Thank you, Chair. With the US market making about 65-70% of the global index, I know it's a speculative question, but there were two very bad choices, Biden or Trump. What impact do we think that's going to have if one or the other get in for the next 4 years?
Gosh, where do I start? I think I said when I spoke that I thought that this year would be quite good for markets. And a slight corollary of that is that whoever comes in is probably going to have to take measures which are less friendly for markets. And that ought to mean raising taxes. But if it's Trump, it won't. And if it's Biden, it probably won't. So I think that will, I think at some point the market will say, do the United States finances add up? And we'll come to the conclusion that they do not. And so I would broadly see it. I think my answer to your question is it's unlikely to be as favourable a market going forward. But it is, to be honest, your question is quite speculative. I'm afraid my response is also quite speculative.
Okay. Any other questions or comments, please? Okay, I see no indication. So thank you very much, William, for your report. We move the recommendation. Can we have a vote for show of hands, please? All those in favour? Thank you. That's unanimous. We now move on to item number 10, which is our future work programme. The recommendation on page 52. I will move that. Seconder, please. The work programme, please.
Thank you, Chair. In the appendix, you can see the work programme for the rest of the committee meetings of the current cycle. Some additional reports will be required over the as we receive guidance on the General Code. This may result in the strategy reviews being moved until later in the schedule, as the guidance comes out may require us to update those. To commence this work, we propose an additional report to the April committee meeting outlining the likely implications of the implementation of the General Code. And the committee is asked to identify any other additional reports required. Thank you, Chair.
Thank you, Tamsin. Do any members have any additions or comments about the work programme, please? Okay, I see no indications, so we'll move to the vote to approve the work programme. All those in favour, show of hands, please. Again, that is unanimous. Thank you very much. Moving on to item number 11, which is a report about the pension administration system. The recommendation is on page 57. I'll move that.
I'll second it, Chair.
Thank you very much. And just to remind members that there is an excluded item further on in the agenda, which will answer the questions at the right time on the report. So, Sarah, would you take us through your report, please?
Thank you, Councillor Kerry. So this report is to update members on the alignment of the main Civica Universal Pension Manager contract and the contract for the system migrating from the council's on-premise data centre to Civica's Microsoft Azure cloud hosting environment into an LGPS enhanced solution contract. So the background to this is that in March 21, committee were updated on the direct award of a contract to Civica for the continued use of the pension administration system. Further work has taken place, and following approval by committee in December 23, funding was approved to move the system out of the council's data centre to a hosted environment. Work's been undertaken with procurement colleagues to bring both elements into a single LGPS enhanced solution contract awarded for a period of 7 years from the 1st of April 24 through to the 31st of March 31. The following elements are covered by the contract. So this moves us to an enterprise a license which includes a one-off license cost and support and maintenance and all existing modules that we've purchased, plus the right to install any newly developed modules during the lifetime of the contract. All charges for the hosting of the system with Civica and a basket of professional service days to support the ongoing implementation of new modules, training, consultancy and additional work required on the system. Given the business critical nature of the pension administration system, in this new contract we have built in 2 biannual strategic road mapping reviews and planning events to cover off the current planning of work and progress on activity, as well as developing our plans for the next 6 months. Information as to the outcome and the plans of the strategic roadmap would be included in the annual transformation report that's brought to committee. Details of the costs are contained in the exempt Appendix A. The recommendation of the report is that the alignment of the 2 contracts into an LGPS enhanced solution contract with Civica is supported for the period of 7 years, April 24 through to the 31st of March 2031. Thank you.
Thank you very much, Sarah. So this is a long-term strategic, medium-term strategic thing, and it's an important move into that hosting environment, which we need to do. So, okay, any question or comments from members, please? Okay, I see none. So may we then move to the vote? All those indicating in favour with show of hands, please. That is again unanimous. Thank you, and thank you, Sarah. Moving on to item number 12. This is the fund valuation and performance report. The recommendation is on page 67, and I'll move that. Thank you. So, Tamsin, may you please introduce the report? Thank you.
Thank you, Chair. This report is to inform the Nottinghamshire Pension Fund Committee of the value of the pension fund at the end of the latest quarter and provide information on the performance of the fund. It's a detailed report, but we have a full agenda, so I'll focus on the key elements. The table in paragraph 3 shows the valuation at the end of December, at the end of September, and the value a year ago. The fund investments have increased by 284 million, which is 4.4% since the previous quarter. Over the last 12 months, the value has increased by 290 million, which is 4.5%. Within this valuation is 508 million of infrastructure investments, amounting to 7.5% of the fund. 9.1% of the fund is now committed to infrastructure investments. The new allocation to infrastructure following this morning's decision is 9.3%. Paragraph 6 shows a more detailed analysis of valuations by portfolio, and paragraph 8 shows the figures for the first 3 quarters of 23-24 and the fund account for last year. Paragraphs 9 to 20 relate to the fund's holdings in fossil fuel companies and investments in sustainable equities and renewable energy. At the end of December, we had an estimated investment of 204 million in fossil fuel companies, which is 3% of the fund, and sustainable and renewable energy investments amounting to 835 million, or 12.4% of the fund. The core index portfolio section reflects the equity market movements over the last quarter. The Schroders portfolio shows the regional analysis of holdings and purchases and sales during the period. The LGPS Central portfolio shows the investments in index-linked gilts made during the quarter and our other holdings. Aberdeen have continued to manage our property portfolio. The specialist portfolio section shows the composition and valuation of the specialist portfolio and the transactions during the quarter. And the section on responsible investment activity summarises some of the responsible investment activity which has taken place during the quarter on behalf of the fund. Thank you, Chair.
Thank you very much, Tamsin, for the overview. That's a little bit of good news in there in terms of the total assets under management value. Any questions or comments from members? Councillor Waters.
Thank you, Chairman. In this report going forward, are we able to have what I alluded to at item number 5, where we could list details about stock lending in this particular section, or if we break that down as another subsection, and then once the members actually have that detail, we can determine, do we need a working group for future discussion, or if we can make a decision in a particular meeting. But yeah, if we can have detail on stock lending in this section, that'd be beneficial. Thank you.
Yes, please, Tamsin.
Right. I will need to do a bit of investigation to see what information we have access to, and then I'll have to think about how best to present it. But that will need a bit of research, I'm afraid.
But the answer is yes, we'll look at it and get back to you and consider it. Okay. Okay, any other questions or comments at the open part of this report? Okay, I don't see any, so thank you very much, Tamsin, for your report. We've moved the recommendation. All those in favour? Show of hands, please. Thank you. That's all those against. Any abstentions? One abstention. Thank you. Which means we move on to the exclusion of the public, agenda item number 13. So we move to the part of the agenda that proposes that we meet in closed session to consider the exempt information in the agenda items 14-16. Therefore invite committee to resolve that the public be excluded for the remainder of the meeting on the grounds that discussions are likely to involve the disclosure of exempt information as described in Schedule 12A of the Local Government Act 1972, and the public interest in maintaining the exemption outweighs the public interest in disclosing the information. I move that. You have a seconder, please?
I'll second it, yeah.
Thank you very much. Can we vote by show of hands, please? All those in favour? And that is unanimous. And may I thank the members of the public who have been watching. Thank you very much for doing so, and we'll see you at the next meeting.